Hi, hello, good evening, and namaste to all of you. Welcome to day 5 of FM MCQ marathon. Over last 4 days. We have done many MCQs, almost 250 MCQs we have covered in last 5 days, and today is our last day where my plan is to do another 50 MCQs, 45 to 50 MCQs. So all in all, we will complete 300 multiple choice questions only in financial management. Yes. Okay. Before we begin, those who are watching the session live, can you quickly confirm, is my audio clear to you? Is my video clear to you? Yes. Good evening. Hi, hi, hi to all those who came now. Is my audio clear? Is my video clear? Are we good to start? Yes. Perfect. So today's target is ratio analysis and types of financing. Can we start with ratio analysis? Yeah, perfect. Question number 1. The receivable turnover ratio is related to managing fixed assets, managing inventory, managing customer collections, and managing working capital. Name is very clear, receivable turnover ratio. That means this is all about how quickly, how frequently you collect money from your customers. Correct. That means this has got nothing to do with fixed asset or inventory or working capital. This is purely about customer relationship. How quickly you follow up with your customers, how good are your credit customers, do we have too much of bad debts, are your debtors paying on time, etc, etc, and all of that is based on receivable turnover ratio or debtor turnover ratio. Correct. So the answer is option C, managing customer collection. We'll do a 1 minute quick revision. Receivable turnover ratio is also called DTR, debtor turnover ratio. Correct. Debtor turnover ratio is equal to credit sales by average debtors, credit sales by average debtors. So in question, if they give you total sales, take out the cash sale, only credit sale you take in numerator. Or sometimes they may not give you cash sale and credit sale breakup. In that case, you take entire sales as simply credit sale and work out the formula to be divided by average debtors. To do average debtors, I need opening debtors and closing debtors. If that is not available, then simply take the available information. If you have closing debtors, say only 31st March year end balance sheet is with you, year beginning balance sheet is not with you, then you cannot do average debtors. You will have to simply take the closing debtors. Correct. The answer will be DTR, and that will be measured in times, number of times. Perfect. Let's move on. Question number 2. I want you to try this. Gross profit 60,000, given data it is gross profit 60,000 rupee. GP ratio 20%. GP ratio is GP by sales into 100 is 20%. Stock velocity 6 times. What is the meaning of stock velocity? Stock turnover ratio or inventory turnover ratio 6 times means what? In a year 6 times inventory will come and go. Inventory will come and go. Find out find out the average stock. Therefore, which formula I can use? By the way, sir, we know inventory turnover ratio, stock velocity. Correct. So inventory turnover ratio is equal to cost of goods sold divided by average inventory. Correct. Now, do we have cost of goods sold? No, but we can find out because you have GP with you, you have GP percentage with you. From there, you can do a reverse working. I will wait for a minute. Give a try. Some students are saying option A is the answer. 40,000 rupee 40. I will wait. Can others please confirm? Is this the correct answer? Is 40,000 correct answer? Yes. I can see now many more students have sent 40,000. Yes, good. Those who are not able to get this, understand from GP ratio with GP amount, you can find out sales. Sales minus GP is COGS, correct? So 6 is equal to COGS by average inventory, and then by substituting the number, you will get the answer 40,000 rupees. All right, good. Let's move on. Question number 3. Question number 3. Long-term solvency is indicated by dash debt equity, current ratio, operating ratio, net profit. Go very slow. They say long-term solvency. They are not saying short-term solvency. Yeah, I'm covering some more explanation in addition to just getting this answer. When I say long-term solvency, I'm talking about ability to pay off the debt over a longer duration. That is, it is not about whether I can pay next month's salary, next month rent, whether I can pay to my creditor on time. That is short-term solvency. That is short-term solvency. When you say long-term solvency, you're talking about repaying your debt, bank loan, bonds, debentures, correct? All of that. And that is based on debt equity ratio. Debt equity ratio, correct? Imagine, let me change, make this one more question. What if this was short-term solvency? Short-term solvency is ability to pay your day-to-day liabilities, and that is based on current ratio, working capital ratio, correct? Liquid ratio. Remember, all those ratios are about short-term liquidity. When you're talking about long-term liquidity, it is not based on current ratio or liquid ratio. I hope this is clear. Long-term solvency is ability to repay long-term debt. Short-term solvency is ability to pay day-to-day liabilities. All right. Question number 4. Capital gearing ratio is the fraction of dash. Capital gearing ratio is the fraction of dash. First of all, what is the easy way to remember capital gearing ratio? In numerator, you have debentures, bonds, preference, correct? All of that, preference share capital. Numerator. Denominator, you have equity shareholders fund. What is the easy way to remember? Numerator is fixed rate of return. For debentures, bonds, bank loan, I know how much is the interest. For preference share capital, I know how much is the rate of dividend, to be divided by equity shareholders fund. For equity share capital, there is no fixed rate of return, correct? Therefore, simple way to understand is fixed return bearing funds divided by flexible fund, which is the only flexible fund. Equity share capital, other two, which is your preference and debentures or debt, basically are fixed return bearing. Now you read option A says preference capital and debenture, numerator 2. If there is a 2 understand in between, then preference and debenture will go to numerator divided by equity share capital and reserves, that means shareholders fund, correct? Option A appears to be correct answer to me. But if you see option B, they've slightly confused it, saying equity share capital and reserves and surplus numerator divided by preference share capital and debenture. In this case, what will happen? Flexible funds by fixed return funds. That is wrong. Simple to understand. Follow what I'm saying. Fixed rate of return is for debentures, loans, bonds, preference share capital divided by fluctuating rate. How much to pay every year? I don't have a commitment. I don't have a percentage that can change, that can move up and down, and that is called as what? Flexible fund. And flexible fund is what? Shareholders money. That means shareholders fund is denominator, debenture and preference share capital is numerator. Yes, sir. Sorry. Question number 5. High inventory turnover ratio indicates no movement of stock, slow movement of stock, high movement of stock, and none of the above. Who can answer this? Go very slow. Read properly. Don't be in a hurry. High inventory turnover ratio means what? High inventory turnover ratio means what? Sir, inventory is moving very fast. Very fast. That means it should be high movement, fast movement. More than high movement, the correct word is fast movement. Yeah. Now those who are not able to understand theoretically, put some numbers. If inventory turnover ratio is 10, it is measured in times. All turnover ratios are measured in times, correct? So 10 times, what is the meaning? In a year, 10 times the inventory will come and go. 10 times the inventory will come and go. So if I do 365 days, by 10 times you get 36 and half days. That means if inventory comes today, it will go out in 36 and half days. If inventory comes today, it will go out in 36 and half days, and this is called as what? Inventory turnover ratio. So one company has 10 times 36 and half days, another company has 20 times. So 365 by 20, if you do, it will come to around 18 days. That means they're keeping inventory for less time. Second company, if they're keeping inventory for less time, that means inventory is moving very fast, correct? Therefore the correct option, high inventory turnover, means high movement of stock or fast movement of stock. Yeah, right. Question number 6, which of the following is a liquidity ratio? Now first of all, understand, liquidity ratio is about day-to-day operations. I've told you many times, repeating once again, when I say liquidity ratio, I'm referring to day-to-day, correct? For day-to-day purpose, equity ratio, proprietary ratio, capital gearing ratio will not be used. Option A, B and D, A, B, D are for long-term funds, and we are talking about what? Liquidity, day-to-day liquidity. That means it is net working capital. Net working, when I say, it is CA minus CL, current asset minus current liability. Yes, perfect, sir. Question number 7. I want each one of you to solve this and send the answer to me in chat box. Gross profit 54,000, GP 20%, collection period 18 days considering 360 days in a year. Then find out average debtor considering that credit sales are 20% of total sale. First of all, question is average debtors. Average debtors. Remember that. Now see, start from the beginning. You have GP 54,000. You have GP ratio with you. From there you can find out sales. In that, credit sales are only 20% of total. That means you should first find out credit sales. Correct? Till this, if you do, you will then get the flow. On the other side, you can even do this 18 days collection period, 360 days in a year. So if you do 360 by 18, you will get to know debtor turnover ratio. Now left hand side is with you. Numerator is credit sale. Denominator will be average debtors. Yes, I won't explain more than this. You should try and send me the answer. I will wait. I will wait. Please answer. Who can give me the answer? Some students are saying 10,800, option B. Question 7, option B. Is that correct? I will wait. Some are saying A. Which one is correct answer? Looks like it is 10,800. I will wait. I will wait. No urgency. Now I can see many students are sending 10,800. Swati, Chetan, Chiru, Monica. Praveen Kumar, Chaitra. Good. B is the answer. Now those who are not getting this, understand GP ratio 54,000. GP ratio is with you. From there you find out sales value. From there you can find out sales value, correct? 20% means 0.2. 0.2 is equal to 54,000 by sales. With cross multiplication you can get sales value. On that apply 20%. Only that portion is credit sale. Yes. Now that becomes your credit sale numerator amount. Yes. And then on the other side, average collection period is 18 days. So if you do 360 days by 18 days, you will get to know debtor turnover ratio DTR. That will be 20 times. So DTR final formula 20 is equal to credit sale divided by average debtor. Now you have numerator, you have left hand side, you can find out denominator as 10,800, 10800. Looks like everybody has sent the answer. Good, very good. Let's move on. 10,800 is the final answer. Question number 8 now. Which ratio includes fictitious assets and losses? Read. Cost of goods purchased and cost of average inventory, cost of goods sold and cost of average inventory, and cost of goods purchased and cost of average inventory, cost of goods sold and cost of average inventory. None of the options is correct. Yes, I think the answer given here is cost of goods purchased and cost of average inventory. Yes, it cannot be cost of goods sold. Guys, understand here, the question is not very clear. I don't say this as your mistake. Observe what is this fictitious asset and losses that they're talking about. Fictitious losses means you're actually not losing. There is no cash outflow, correct? But you know, when you do EOQ computation, you are taking that opportunity cost, correct? So from accounting angle, for opportunity cost, there is no journal entry. There is no money going out. There is no receiver giver. There is no cash or bank transaction. Therefore, they are counting that as a fictitious loss. And where will you use that? Cost of goods purchased and average inventory. That means you will use it in EOQ only. Why option B I am not taking? Because that has cost of goods sold also. When you do EOQ, it's all about purchase. It's not about sales. Correct? According to me, the question is not very clear here. Fictitious assets and losses. So if I go by the understanding that fictitious loss means opportunity cost, that is the carrying cost C that you use in EOQ formula, then it is based on what you purchase, not based on what you sell. Therefore, they have gone by cost of goods purchased and cost of average inventory. Therefore, appropriate answer would be A. I hope this is clear. In fact, question itself is not very clear in terms of what they are trying to ask, but then in exam we don't have a choice. We have to see which is the best suitable, most appropriate answer. Therefore, if I count carrying cost as a fictitious loss, because there is no money going out, correct, from accounting logic, there is no money going out. Therefore, if I count that loss as a fictitious loss, then it is purchase and average inventory. It is not based on sales. Therefore, option A is the final answer. Question number 9. I will wait. I want you to try. A company has average debtors receivable 60,000. Total sales are 2 lakh, out of which 20% is cash sale. If 20% is cash sale, balance is credit. Question is, calculate its average collection period. Average collection period. I will wait. I want you to send the answer. Question number 9. I want you to try and send the answer. Let's see who can. Is it approximately 137 days? Is it option D? Yes. I can see Harish, Chiru, Medha, many more are sending the reply now one by one. Good. Yes. D. 137 days is the answer. Yes, sir. Let's move on. Easy question. That was 20% cash sale. That means balance is credit sale. That should be our basic level understanding. Yes, sir. Question number 10. Give a try. Working capital of a company is 1,35,000. Current ratio is 2.5. Liquid ratio 1.5. Reserves and surplus given. Then what are the quick assets of the company? Now, quick assets. How to calculate? First of all, you see you have working capital with you. You have current ratio with you. From working capital, using current ratio, you can find out current asset and current liability. And liquid ratio is all about CA minus stock, current asset minus stock, yeah, divided by current liability. Yes, I want you to try. I will wait. I will wait. For those who are finding it difficult, I am repeating. This is the hint. You have working capital amount with you. You have current ratio 2.5 is to 1. Therefore, let current liability be X. Then current asset will be 2.5X. So if you do 2.5X minus X, that should be equal to 1,35,000. From there, you can find out value of X, that is current liability. Then 2.5 times is current asset. And then you have liquid ratio, left hand side 1.5 should be equal to numerator current asset minus stock, which is quick asset, divided by current liability. Are you getting 1,35,000? Are you getting 90,000? What's your answer? I'm waiting. Some of you say, some of you are saying, sending me option A. Is it A or B? Is it A or B? B. 1,35,000. Guys, what happened? 2.5x minus x, 1.5x. Now, one by one, you are getting the correct answer. You will not get 90,000. It should be 135,000. B is the answer. Guys, please read. Question is quick assets. Question is quick assets. Quick asset is CA minus stock. B is the final answer. You are doing a simple mistake. Those who are saying, sir, I got 90,000. No, no, no. You are doing a mistake in the last step. Those who are saying 90,000, you are doing a small mistake in the last step. Question is not how much is stock value. Question is not how much is CA value. Question is quick asset. Quick asset means that numerator. I hope this is correct now. 90,000, the answer that you are sending is not quick asset. I think you are sending me stock value. Who is asking you stock value? I hope those who did silly mistake understood what was the mistake. Yes. Be careful in exam. We can't lose marks for such silly things. Yes. I hope it's fine now. 1,35,000 is the final answer. Question is quick asset. Those are still not getting the final answer. If you're thinking 90,000, 90,000 is stock value. Nobody is asking you stock value. I know why you sent me stock value. Sir, in quick asset ratio formula, that quick ratio, we always do CA minus stock by CL. CA is given, CL is given, left hand side is given. We find out stock, sir. That's how you have done one or two sums in practice. But here read question properly. Question is quick asset question. Yeah, right, sir. Question 11. Now tell me, your favorite question came now. Inventory is given. Very good. Current ratio 2.5, liquid ratio 1.5. If inventory is 9,60,000, then how much is current asset figure? Go ahead now, give a try. Now at least read properly what they want. Please, no silly mistakes. Amount of current asset they are asking you. Liquid ratio is with you. So left hand side can be 1.5 is equal to CA minus 9,60,000 by CL. Sir, CA, CL, I don't know. 2.5 is to 1. So CL can be X. So my equation will be something like this. 1.5 is equal to 2.5x minus 9,60,000 divided by X. Many are saying question 11 option C 24 lakh is the final answer. Should I sending me correct answer in chat box? Yeah. Yes. Those who are still not getting, this is the way to do. Look, inventory value is with you. Which formula uses inventory value? Not current ratio. Liquid ratio uses, correct? That means you should start writing liquid ratio is equal to CA minus stock by CL. Liquid ratio is 1.5 is to 1. That means I can write left hand side 1.5. So 1.5 is equal to, I don't know CA value, but I know CACL ratio is 2.5 is to 1. Let the CL be X. That therefore, how will my total equation be now? 1.5 is equal to 2.5x minus inventory value 9,60,000 divided by X. Then you have to solve the equation. Am I correct? Yes, sir. Question number 12. Can I proceed? Total sales given. Cash sales are, please read properly. Cash sales are 25% of credit sales. So it is not 25% of 30 lakh rupee. You have to be very slow. You have to be very slow. Debtor turnover is 8 times. Then what is the amount of average debtors? First of all, please understand the sentence. Cash sale is 25% of credit sale. Therefore, let the credit sale be X. X. That means cash sale will be 0.25x. 0.25x. Therefore, total sale is equal to credit sale plus cash sale. So it will look something like this. 30 lakh is equal to x plus 0.25x. From there you can find out the value of x. That will be credit sale. That will be credit sale. Yes. And they want you to find out average debtor. You already have debtor turnover ratio with you. So left hand side DTR 8 is equal to credit sale. I think you get 24 lakh. I think the final answer is 3 lakh rupee. Am I correct? Is everyone getting the answer? 24 lakh is credit sale value. That's not the final answer. Final answer they want from you is debtor value. That means DTR is equal to 24 lakh by average debtor. Left hand side is 8. So 8 is equal to 24 lakh by average debtor. 3 lakh rupee. Many have sent the correct answer. Very good. Yes. Right, sir. Question number 13. Debt equity ratio 3 is to 1. Total assets 20 lakhs. LAC means lakhs. Current ratio 1.5 is to 1. Own fund. Own fund means shareholders fund 3 lakh rupee. What is the amount of current assets? Very good question. Give a try. Yes. Guys, if any of you are stuck in a particular question, make a note of that somewhere and continue this. At the end, you can ask me, or else you can put that in the comment section. I will reply to you. detailed calculation. Don't worry. If you are not getting a particular sum, make a note and move on. Continue. At least next sum, why do you want to miss? Give a try. 13th question. All of you. Siri has sent an answer saying 12 lakh rupee option C. Okay. Chaitra, 12 lakh. Good. I don't know what is the name of this student, but his YouTube ID says Sneaker Hunk. Sneaker Hunk. Your answer is correct. Monica, good. Guys, you have to go little slow here in this question. You have to prepare a small balance sheet actually. That will help you to do it faster. See, debt equity ratio 3 is to 1. Total asset 20 lakh. So if you put a balance sheet, 20 lakh is total asset. That should be equal to total liability. 20 lakh this side, 20 lakh this side. Correct? Asset 20 lakh. Therefore, this should be 20 lakh. This is asset, this is liability. And then it says debt equity ratio 3 is to 1. Owners fund 3 lakh rupee. Owner fund means shareholders fund. And debt equity ratio 3 is to 1. That means debt is 3 times. 3 times. Able to follow? That means debt should be 9 lakh rupee. Yeah. So this is owner's money. This is debt money. Yes, sir. And then what is the amount of current asset? Now, if this is 3 lakh plus 9 lakh, this is 12 lakh. Balance 8 lakh has to be current liability. Balance 8 lakh has to be current liability. And current ratio is 1.5 is to 1. That means current asset should be 1.5 times of 8 lakh. That means the final answer should be 12 lakh rupee. It's actually a good question. You can do it without balance sheet also. With balance sheet you will be faster. So tell me now, if current asset is 12 lakh rupee, then balance 8 lakh I should understand as fixed asset. Though they have not asked, for knowledge purpose I am discussing. Correct? If they say in exam how much is fixed asset, then asset side, if you have current asset and you already know total asset, then you know balance should be assumed as fixed asset. Correct? Yes, sir. Good question. Let's move on. Question number 14. In the balance sheet, amount of total asset 10 lakh, current liability 5 lakh, share capital and reserve 2 lakh. What is the debt equity ratio? I want you to try. Again, they said balance sheet. Just put a small balance sheet the way I showed previous sum. Total asset should be equal to total liability. Current liability you fill. Then the balance amount. Capital and reserve given. I want you to try from here. Give a try. Some are saying B 1.5 is to 1. Some are saying 2 is to 1. What's happening? Let me explain. Total asset 10 lakh. That means total liability should be 10 lakh. Yeah. Let's see. Don't worry about the answer printed. Let's see. In the balance sheet amount, total asset is 10 lakh. Okay. Current liability 5 lakh. So this is here. Capital and reserve 2 lakh. Capital and reserve 2 lakh. Okay. Capital and reserve means owner's fund. What is the debt equity ratio? Now tell me, the balance 3 lakh has to be long term debt. Debt equity, that means it is 3 by 2. 3 by 2 means 3 is to 2. 3 is to 2 is 1.5 is to 1. Yeah. I think answer printed here is not correct. 1.5 is to 1. 1.5 is to 1. Actually 3 is to 2, which can be written as 1.5 is to 1. Yes, sir. 3 lakh by 2 lakh. Good. Those who sent option B, you are correct. I have updated the answer and I sent PDF to you. I will correct this. Don't worry. Okay. Chalo, question number 15. Go slow. This is little confusing actually. Current ratio of a business concern is 1. Its net working capital will be dash. Guys, please understand the question first. Current ratio is 1. That means CA by CL is same number. CA by CL is 1. That means a number divided by same number. That means current asset and current liability should be same value. If current asset and current liability is same value, then their working capital will be 0. It should be nil. CA minus CL should be 0. Yeah. Question is easy, but if you go fast, you will get confused actually. Because some people think current ratio is 1:1. That means we have more current asset than current liability, so they'll tick positive. No, no, no. Same number CA and CL. Same number by same number. That's why it is 1. And when you do CA minus CL, same number, it should be 0. Yes, sir. Question number 16. Read. I want you to think and answer this. When cash is collected from debtors, current ratio will remain same, it will increase, it will decrease, none of the above. Please observe, cash is collected from debtor. Debtor is also a current asset. Cash is also a current asset. So when you collect 10,000 rupee from your customers, debtors, debtor balance will come down, cash in hand balance will go up. Net effect of current asset, net effect is same. It is 0 actually. If it is 0, sir, then the ratio will remain same. Ratio will remain same. Some students are getting confused. I am seeing wrong answers in chat box. Guys, you collect cash from debtor. Debtor is also current asset. Cash is also current asset. One current asset will come down. Another current asset will go up. Net effect is 0. Net effect is 0. Therefore, it should remain same. Yes, sir. Question number 70. Read. If an investor states that a company's share is overvalued at 65 times, he is referring to earning per share. Definitely no, because earning per share is based on how much he is earning. It is not about whether a share is overvalued or undervalued. Dividend yield is again based on how much dividend he'll earn. DPS by MPS. Book value, why will he say overvalued? How can book value be overvalued? Book value is always at its par number, correct? PE ratio, that's the correct answer. Why? Because in PE ratio you calculate what? MPS divided by EPS. To earn 1 rupee EPS, how many times people are ready to pay? So if the number is 65 times, what does it mean? To earn 1 rupee EPS, people are ready to purchase that share at 65 rupee. 65 MPS by 1 rupee EPS. Guys, I don't want you to just focus on final answer. Also do a quick revision along with me. What is P ratio formula? MPS by EPS. Number is high, that means share is too costly. Numerator is how much people are ready to pay. MPS divided by EPS, how much people are going to earn. To earn 1 rupee EPS, I am paying 65 rupee MPS. That means it is too costly. That's what they are asking. Yeah. Right, sir. Question number 18. Dividend payout ratio is dash. First of all, dividend payout ratio means what? How much dividend we are paying out of earnings. How much dividend per share we are paying out of total earning per share. That means it should be DPS by EPS. DPS by EPS. Suppose earning per share is 10 rupee. Earning per share is 10 rupee. And DPS, dividend per share, is 3 rupee. So 3 by 10, 30%. 3 by 10 is 0.3 or 30%. So payout ratio will be option C, DPS by EPS. Yeah. Right, sir. Question number 19. High debt equity ratio means what? First of all, understand debt equity ratio. What is the formula? Debt divided by equity. One company has 2:1. That means 2 by 1. Another company has 7 by 1. 7:1. 7 rupee debt, 1 rupee equity. That's what they're saying. If a company has very high debt equity ratio, what does it mean? Read option A says company is equally funded by debt and equity. If it is equally funded, then it will be 1 by 1, same number by same number. Company is excessively funded by debt. This looks correct answer to me. Option C says company has no debt. If it has no debt, then how can there be high debt equity? Company's interest rate on debt is very high. Doesn't matter how much is interest rate. How much is debt value? That is what matters. Option B is the correct answer. Yeah. Let's move on. Question 20. Low asset turnover ratio is a dash sign. Good sign or a bad sign? Sir, it's a bad sign. First understand what is this formula. Low asset turnover ratio. Low asset turnover ratio meaning turnover divided by asset is very less. What is the meaning of turnover by asset? How much turnover are we generating from each rupee of asset? How much turnover are we generating from each rupee of asset? Shouldn't that number be very high? High number means what? You are generating more turnover from each rupee of asset. And here they say low asset turnover ratio. That means from 1 rupee asset you are generating very less turnover. That's not a good indicator, sir. Bad sign it is. Yeah. Question 21. Which ratio is used to measure company's profitability from its direct activity? Direct activity means what? Buying raw material, doing the production, selling products, correct? That means this is all about your trading account activities, opening stock, purchase, direct wages, fuel, water, gas, heat, and this side on the credit side, sales, closing stock. Sir, they're talking about gross profit. That's exactly the answer. GP ratio. That is for direct activity. If they say indirect activity, then they're talking about NP ratio, net profit. Net profit ratio. Yeah. As of now, question is direct activity. Therefore, I should go by GP ratio. Yes, sir. Question 22. Think and tell. Cash ratio or absolute liquidity ratio is calculated by using dash formula. Cash, bank, marketable security divided by daily total cost, current liability into daily total cost, or cash plus bank only divided by daily cash cost. Yes. Think and tell. Question is cash ratio. I know many students haven't revised this. In that liquidity ratio segment, there were 4 formulas actually. Current ratio, liquid ratio. These two everyone knows. After this, there was absolute liquidity ratio. In absolute liquidity ratio, I said we should not take CA current asset minus stock. We should take only those current assets which are fully liquid in nature. What do you mean by fully liquid in nature? Cash, bank, marketable security. That's all, nothing else. To be divided by current liabilities. Correct? This is your option B. Cash ratio or absolute liquidity ratio. Yeah. Let's move on. Question 23. If basic defense interval is 10, what does this mean? Think and tell me. First of all, what is this basic defense interval? This was the 4th ratio in that liquidity discussion. Basic defense interval is 10. That means even without collecting 1 rupee from anybody, from my customers, even without collecting 1 single rupee from others, how many days can I run my business? Think of a situation like, say, lockdown. You won't collect money from anybody now, correct? How long can you survive using your own money? That is basic defense interval. And if that comes to 10, that means 10 days you can survive without 10 days you can survive without collecting money from outsiders. That means company can survive, option B, 10 days with available cash. Whatever cash they have in their pocket, that is enough to manage 10 more days of business. Is this clear to you? Yeah. Important formula, but nobody covers this. Nobody revise. No one has revised this. I know you only do current ratio and liquid ratio in MCQ format, you see now. If you don't know this, and even question 22 was related to absolute liquidity ratio, many students don't revise this. Very, very wrong. Yeah, please don't neglect. Question 24. Before approving any loan, banks will normally check dash of the applicant. Sir, should I tick Aadhaar and PAN number? Very good answer. But that's not there in option A, B, C, D. Aadhaar number and PAN number is correct, but that's not there. You have to see from financial point, what is that they're going to check. Will they check asset turnover ratio? Definitely not. Why will bank be interested to know this, how much turnover you're generating using your assets? That doesn't matter. Bank is worried about what, whether you have enough ability to pay EMI or not, monthly installments. Correct. That means they check what, debt service coverage ratio, DSCR. There was a heading in ratio analysis called coverage ratio. Under that, there were two ratios related to bank: debt service coverage ratio, interest service coverage ratio. That interest service coverage ratio should be at least more than 1. There you count only interest, but here it is full debt service coverage. That means you will count full EMI, which has principal component as well as interest component, and this should be ideally more than 2. Ideally more than 2 times. Yeah. Right, sir. Question 25. Dupont model is a combination of 3 things. Which 3 is the question? Sir, Dupont model talks about how much profits you make from the sales, how much sales you can generate from the asset, and how much of assets you have purchased using owner's money. Remember, NP margin, asset turnover, equity multiplier. I hope you are able to recall this was a combination. NP margin, NP by sales, asset turnover, sales by asset, equity multiplier, asset by equity shareholders fund. Yeah. Which option is correct? Option C. Option C is NP margin, asset turnover, equity multiplier. Yeah. Perfect. I think this is our last question in ratio analysis with 25 MCQs. We are done with ratio analysis. Let's move on to our last topic. We decided types of financing. Yeah, right. This is a pure theory topic. Either theory question can come from this, or theory based MCQs can come from this. Guys, though this is a theory topic, when I planned this MCQ, I thought I should cover full syllabus. Therefore, even from this, I've decided to do at least 20 MCQs. Yes. So let's not neglect because it is theory. I'll be doing 20 MCQs even on this. Pay attention and give me your answer. Question number 1. Major disadvantage of having excessive equity share capital. So think before you check the options. What will happen to a company if it is funded too much using equity shareholders' money? Now read one by one. It says first, reduction in EPS, correct. Dilution of ownership and control, definitely true. It's very costly to the company. Yes, it is costly to the company. All of the above. Sir, all of the above is correct answer. Sir, why is it costly to the company? Think, equity shareholders, they take highest risk. And because they take highest risk, they expect high return. High return to the investor means what? High cost to the company. Return to investor means cost to the company. Yes. All right. Question number 2. Reserves are considered to be the most preferred source of fund because A, no flotation cost. Sir, correct. Why no flotation cost? See, this flotation cost will come into picture only when you issue shares. During that time, you have to pay some charges, security transaction, you have to pay to SEBI, maybe some charges to ROC. All of that charges, some percentages are applied. But that's not there. You are using your own reserves and surplus. Company has this money with them already. Second, no dilution of ownership. Correct? Because you're not bringing new shareholders. It will not change the number of shares. Easy and convenient. 100% true. Because you don't have to pass any resolution, no ROC, no tax payment, no flotation cost, nothing. Your own reserve, you are using it. Sir, all of the above is the answer. Yes, perfect. Option D is the answer. Let's move on. Question number 3. This I want you to answer. I know many of you have not read this. Dash bond has a call option which gives the issuer the right to redeem the bond before maturity at a predetermined price. Is it a redeemable bond? Redeemable bond is bond issued today to be redeemed after few years. It's callable bond, which is the correct answer. In callable bond, what happens? Give me 1 minute to explain. A Limited has issued bond today, redeemable after 3 years. If company thinks I should redeem some of those bonds early, I don't want to wait for 3 years. Within 2 years, I want to take that back. After 2 years, can they do so? They can, provided that bond is a callable bond. That bond is a callable bond. That was the question. Before maturity, issuer means the company. Tell me what is the exact opposite of this? Puttable bonds. What is puttable bond? A Limited has issued 3 years bond to a person, investor. Now that investor wants to come to the company after 2 years and say, I want to redeem the bond now itself. I can't wait for 3 years. Can investor do so? Answer is yes, if that bond is a puttable bond. This is a very important question. They have asked this 2-3 times. Simple. What are the two types of bonds? Explain. Once they even asked what is the difference between callable bond and puttable bond. Now they can ask this in MCQ. Be careful. If company has a right to redeem early, it is callable bond. If the investor has the right to redeem it early, then it is puttable bond. Yes. Let's move on. Question 4. Bonds are similar to equity shares? No. Preference? Definitely no. Reserves and surplus? Never, even in dream. Debenture? Answer is correct. Tell me what is the similarity between bond and debenture? Why are we saying they are similar? Sir, both we have to pay interest. Correct. Sir, both are outsiders. Correct. Sir, both will not dilute our ownership. Perfect. Sir, both will help us saving taxes. Perfect. Sir, both are called debt. 100% correct. Therefore, bonds are almost like debentures. Yeah. Easy. Question number 5. Masala bonds are mainly to attract dash investors. High net worth investors, Indian investors, foreign investors, Indian banks, or government. First of all, understand the purpose of masala bond. I think some of you remember this discussion. Masala bonds are issued by Indian company outside India to attract foreign investors. When your purpose itself is to go outside India, why will your target be Indian investor? If it is Indian investor, you can issue bond in India itself. Why do you have to even name it as masala bond? Hello? Common sense, correct? Masala bond is the bond issued by Indian company outside India to attract whom? Outside Indians. That means foreign investors. Yes. Perfect. Question number 6. Dash bonds are used to finance urban infrastructure projects. Good question. Masala bonds, not necessarily. Masala bonds are issued outside India, and that is not for a particular purpose. That can be for any purpose. NHI bonds, guys, NHI bond is for highway construction. And question is urban. Urban means within city. Within city, why will you build highway? Some common sense, please. Sir, this is municipal bond. Municipal bonds. Who will issue municipal bonds? Sir, local authority. Local authority, the city corporation has the power. to issue. Mumbai Corporation, Delhi Corporation, Bangalore Corporation, Chennai Corporation, they want to do some city infrastructure work, some water supply project, some flyover, some underpass, some footpath project. For that they need money. For that they go for municipal bonds. Option C is the correct answer, municipal bonds. Yeah, perfect. Question number 7. Loans taken by a company normally from commercial banks for a short period because of pending disbursement of loan sanctioned by financial institutions. Very good question. Now understand first, pending disbursement, what does it mean? A company has gone to a bank, bank has verified all the documents, bank has agreed to sanction loans, bank has even given sanction letter, but money has not been disbursed. There is some time gap. Bank says take the sanction letter today. Today is what? 1st January. Okay. But we will give you money after 15 days, after 1 month, after 45 days. Now in the time gap, that borrower can't sit and wait. He wants some temporary loan for 15 days, 30 days, 45 days. That loan is called as what loan? Bridge finance. Bridge finance, correct? Bridge, name itself, it is the loan given to bridge the time gap between sanctioning of loan and actual disbursement of loan amount. Yeah. All right, sir. Question number 8. Read. Select the method of investment normally done by venture capitalists. Venture capitalists will invest in what form? Go slow. A. Equity financing. That is, they will become equity shareholders. Correct. Conditional loan. Income note. All of the above. If you remember properly, it's all of the above. Guys, don't be in a hurry. If you have textbook with you, check. Under this category of venture capitalists, there were many ways. One way, they'll become 49% equity shareholder. In second, hybrid, some interest and some royalty. In one more possibility, some low interest in initial period, medium interest little later, high interest in the later part. Therefore, all of that is covered. You see option ABC. Equity financing, conditional loan, income note, all of the above. It's not only equity. Equity was the first way, but that's not the only way. Yeah. Question 9. Parties involved in debt securitization. Originator, special purpose vehicle, SPV, special purpose vehicle, investors, all of the above. Sir, I think this is all of the above. Why all of the above? Originator is the one who starts that entire flow. Correct? Special purpose vehicle is that entity, that new fund created to convert debt into new instruments. Correct? Investors are those who will buy those units, buy those bonds issued by special purpose vehicle. So sir, all three parties are included in this. Originator, the one who starts everything. Special purpose vehicle is that fund created or a new company created only to convert debt into security. Investors are those final people who will invest. Correct? Yes sir, all of the above is the answer. Let's move on. Question number 10. The risk and reward incident to ownership are passed on to the lessee. The lessor will remain only as legal owner. This is dash lease. Guys, extremely important theory. Operating lease and finance lease. Please do not take this lightly. I think this lease accounting is there even in your accounts paper. Lease related, some questions can be asked even in audit, in that special audit topic. Sometimes they ask audit of leasing companies. Very dangerous. Don't take this lightly. And if you don't know what is the basic difference between finance lease and operating lease, you won't be able to answer in any of these subjects. Correct? Answer is finance lease. In finance lease, risk and reward incidental to ownership is passed on only on paper. The lessor remains the owner. He is not actually interested in that asset. All that he is worried about is collecting rent. The income is his focus. Asset is not his focus. Correct? There was a small table. Remember, finance lease, operating lease. In finance lease, his focus is to get money. His focus is not to keep that asset in good condition. Yeah, all that responsibility is passed on to whom? Let's see. Yeah, perfect. Question 19. In dash lease, lesser bears the risk of obsolescence. Go slow. They're asking lesser bears the risk of obsolescence. If that asset is getting deteriorated, if more repair maintenance has to be done, lesser is taking care of that. That means this is not finance lease. This is operating lease. In finance lease, I told you just 1 minute back that owner of the asset, lesser, is interested in only getting the rental income. He is not interested whether asset is maintained in good condition or not. Guys, some of you are giving wrong answer. Think question is about lesser. Yeah, I am the owner of the asset. I am the lessor. I gave an asset to use. I said you use it, pay me rentals. But if there is some problem with the machine, call me. I will spend for repair and maintenance. Asset should be in good condition, and that will happen in which lease? Operating lease, not in finance lease. Correct? Yes. Question 12. Under dash, the owner of an asset sells the asset to a party who will in turn leases back the same asset to the owner in consideration of the lease rental. If you understand the question, there itself you have the answer. Under dash, the owner of the asset, I am the owner of the asset. I will first sell it to you. You are that party. I will sell that asset to you, and then I'll do what? Take that same asset back. That means, sir, this is sale and lease back transaction. First I sell, and then I take the asset back on lease because I want that asset, but I'm in need of cash. So what do? Sell that asset, take cash from you as part of consideration for sale of asset, and then I want to use that asset, sign a lease agreement and continue. Okay. Yes, sir. Question number 13. In dash lease, the lessee has the option of purchasing the asset at the end of the lease period. I will wait. I want your answer to this. I want your answer to this. Who can answer? Read the question second line properly. You will get to know. It says what? The lessee has the option of purchasing the asset. If there is an option of purchasing the asset at the end of the lease, that means it should be an open-ended lease. Option B. It should be open-ended lease. What is the meaning of open-ended lease? I am giving an asset to you today, but we are keeping the option open. Once the lease period is over, you as a lessee can pay me some lump sum amount and I am ready to sell it. We are keeping that option open. Understand, the wording is option. That means there is no compulsion. I cannot say you should buy, but you have a choice. If you want to buy, you can buy. That's called open-ended lease. Yeah. Sir, what is close-ended lease? 1 minute quick revision. What is close-ended lease? When I am signing the lease agreement today itself as the lessor and you as the lessee, we both are signing it. After 10 years, once the lease period is over, so much of amount will be paid by lessee to lessor and asset will be transferred. If it is pre-decided, then it's called close-ended lease. But if we keep the option open and we say we will discuss, mutually agree to a number, and accordingly, let's say, has an option, it is just an option, there is no compulsion. That means we have kept the option open. It's called what? Open-ended lease. I hope you got the point. Yes. Commercial papers are dash long-term debt instruments, short-term, medium-term, all of the above. First of all, tell me, commercial paper, this is more like a debenture but for short-term purpose. Easiest way to understand commercial paper is it's like a debenture instrument, but time period is less than a year. Therefore, it should be what? Short-term debt instrument. It can be issued for 14 days, 7 days, 25 days, 1 month, 2 months. Correct? Issue now, redeem it within a financial year. That means it's a short-term fund. Therefore, the correct answer should be option C. Everybody? Yes, sir. Question 15. Tell me. Seed capital assistance is mainly provided to dash businesses, foreign businesses, medium-sized businesses, large and very small business. Understand, name itself says seed capital assistance. That means small contribution initially done by banks. And you have a lot of conditions. If your business is 200 crore worth business and you want 200 crore loan, you can't apply for loan under seed capital scheme. This is mainly set up for small businesses, correct? Which is the bank that gives you mainly seed capital assistance, given by IDBI, Industrial Development Bank of India. Yeah. Government of India has come up with lot of new schemes also, Mudra scheme, and there is one more scheme for Swanidhi. I think that's another scheme wherein small shops, footpath vendors, small businesses, they want some loan, they will get loan without much of security and not without much of paper work and all of that. So as of now, seed capital is for small businesses. Yeah. Let's move on. Question 16. ECB, external commercial borrowings, are loans taken in dash. Loan taken in dash. First of all, name itself tells you external commercial borrowing. That means loan is taken outside India. Correct? Read all the options properly. Indian branch of a foreign company. That means head office is in America, branch is in India. No, 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 that's not ECB. Second, foreign branch of Indian company, head office is in India but branch is in USA. There we take loan. Yes sir, this looks correct answer. Indian company in India. If Indian company in India takes loan, why do you call it external commercial borrowing? It is within the same country. Sir, option B should be the correct answer. Foreign branch, Indian company. Yeah, done. Question 17. Dash are securities offered by a non-US company. Please read properly. Non-US company. That means Indian company, Japanese company, Singapore company. Okay. Yeah, read again. Dash are securities offered by non-US companies who want to list on any of US stock exchanges. Sir, this is American specifically because the word used is US stock exchange. This is American Depository Receipt, ADR. American Depository Receipt, ADR. Can you confirm? Is this correct? Read properly. Non-US company. And then they say companies, they want to get listed on US stock market. That means it is exclusively for American. Yeah. So this is ADR. Question 18. Dash does not carry any interest, but it is issued. Sold means issued by issuing company at a discount. Now tell me, if somebody has to purchase a bond, all four options are bought, and it says there is no interest paid, then why should they buy? Sir, it will be issued at discount but redeemed at par. Think about it. 100 rupee bond. If you give 100, they will return 100. No interest. Why should you invest? Correct? That means if there is no interest, then there should be some other reason why people should invest. Therefore, what those companies do, they say, boss, we can't give you any interest, but we will issue it at 98 rupee, redeem it at 100 rupee. The 2 rupee will be your return. Correct? That means zero coupon bond is the correct answer. Coupon is interest. If there is no interest, simple English also, if you read properly, it says what? Does not carry any interest. Interest rate means coupon rate. Interest rate means coupon rate. That means it should be zero coupon bond. Question 19. If a lease has three parties involved in it, then it is called as finance lease, operating lease. Both are wrong. Why? In both finance and operating lease, there are only two parties, lessor, lessee. That's all. Option D, sale and lease back. Here also you have only two parties. I will sell the asset to you, take it back on lease. Where is the third party? Option C says leveraged lease. This is the correct answer. What happens in leveraged lease? Those who do not know, A Limited takes a loan from bank. Now bank is that third party. A Limited takes a loan from bank and using that purchases an asset. That asset is given on lease. and that lessee, say B Limited, they will pay lease rental to bank till the loan is cleared. And once the loan is cleared, lessee will pay rentals to lessor. B Limited will pay rentals to A Limited. That means you're involving a third party. There is lessor, there is lessee, and there is a bank. Therefore, the correct answer is leveraged lease. Bank, lessor, and lessee, three parties involved. Okay, question 20. Read. In dash, foreign companies can issue depository receipts to raise funds from Indian capital market. Read properly. Company is a foreign company. That means say Singapore company, Japan company. But they want to raise money from Indian stock market. That means, sir, they are trying to attract Indian investors. Correct? That should be what depository receipt now? Indian depository receipt. This is exactly reverse of ADR. In ADR, I said Indian company is going to US stock exchange and attracting US investor. In IDR, reverse should happen. US company should come to Indian stock exchange, NSE or BSE, so that they can get money from you and me, Indian citizens. Yes, sir. That means this is Indian depository receipt. Yes. Good. With this, we are done with all MCQs of this topic. And with this topic, we are done with entire financial management MCQ revision. Guys, in last 5 sessions, totally, including today's session, we have done roughly 300 MCQs, and financial management paper as a whole itself is 50 marks, 50. And since they have said 30 marks will be MCQ out of 100 marks, financial management MCQ will be 15 marks, 1-5. For 1-5, 15 marks MCQ, we have covered almost 300 MCQs. This is more than enough. This is more than enough. In last 5 sessions, most of you have participated live and have sent correct answers. Yes. Medha has a small doubt, sir. Can you please explain the difference between zero coupon bond and deep discount bond? Understand, Medha, name itself is zero coupon bond. That means interest is not at all there. The difference between issue price and redemption value. Issued at discount, redeemed at par. That's the gain to the investor. In deep discount bond, you will have interest, but interest will be very minimal, say 0.5%, 1%. But the bond is issued at discount. So in zero coupon, interest is zero. It's only the discount. But when it comes to deep discount bond, there is discount and there is also some nominal interest, maybe very less, 0.25% or 0.5%. Yeah, but it is not zero. It is not zero. Yes. Yeah. One student has asked a doubt on ratio analysis. Please put that question number once again in the comment section. I will check and revert because I'm in another slide now. I don't want the deviation. You please put that in comment section. I will reply. Not to worry. Okay. Just put the question number. By the way, today since we are at the end of our MCQ revision, all the PPTs, I will merge them and convert it to one single PDF document, and that will be shared with all of you. I will put that in the drive, and the link to download that PDF will be there in the description of this video. Okay, all of you, maybe tonight or tomorrow, once again, you check this particular video and go to the description. You will have the link. From there, you can download the PDF. Okay, I know downloading PPT will be a challenge to you, then to reuse it. Therefore, I will club all MCQs in one PDF and put that on the drive. From there, you can download and use it. It will be both question and answers. And in case when you go through later for your revision, if you get any doubt, come to the relevant video. watch that video, watch that particular question. All right. Yes. Some students are asking, sir, will these videos be there on YouTube? Yes, yes. Videos will be there on YouTube, and entire PDF link also will be there forever. Not to worry. We will not be removing this. Come back to this video, go to description. You will have link from where you can download PDF also, and that link will not be disabled. Do not worry. There is no expiry date. Okay. I hope I have clarified this. Yes. Hello. Good. Everyone. Thank you so much. Sir, now we have completed FM MCQ. What about costing MCQ? You will get the announcement very soon. FM MCQ is done. After this, I said we will be doing costing MCQ. I will be doing. Do not worry. Just wait for 1 or 2 days. I will update you with the dates and the time. We will meet once again for costing MCQ as well. Okay. Yes, Praveen, that was your question. I have answered. All right. Chalo. Now, those new students who are not from my regular batches, if you wish to buy entire FM class, it is available, and we are running a special offer. It will end today. Entire financial management can be purchased. Only FM can be purchased as well. Link to purchase my class will also be shared in the description below. We are running a special offer. Normally the price is 5,000 rupee, but 15% discount offer is going on right now. You can buy it at 4,250. Both my financial management as well as cost and management accounting Google Drives, recorded classes along with hard copy textbook will be shared with you, whether you're writing in May 24 or November 24 or even May 25. Since the new syllabus has come, you can purchase this. All these classes and MCQs are applicable for new syllabus. Okay, chalo. Thank you so much, everybody. Those who joined live, thanks a lot for participating. Most of you gave correct answers. Most of you participated. I'm very, very happy. We will meet once again very soon for costing MCQ live on YouTube. Okay, with that, I'll be closing this session. Some students are sending me another request in the chat box. Sir, in the mock test paper, they have asked a little tricky question. Can you please solve that? Guys, I will do one thing. I will go through that question first. Yeah, one of you please send the mock test paper to me on Telegram. I'll go through that, and if necessary, I will do a short video and upload that as well. Okay, sure. Thank you so much, guys. We'll meet once again for costing MCQ. Till that, take care, study well. Bye bye from my side.